Welcome back to the Wall Street Podcast. Today we're digging into a key analysis from Citi Research.
That's right. It's a flash report titled South Korea Economics, just out on August 18th, 2025. It's essentially a preview for the Bank of Korea's Monetary Policy Board meeting coming up on August 28th.
And the headline seems to be a rate hold at 2.50%, but Citi sees more to it, right? They flagged four dovish signals.
Exactly. While they expect rates to stay put for now, these signals suggest a clear leaning towards easing down the road, so we'll unpack those for you.
Okay, let's start with the main expectation, the rate hold. Why the wait-and-see approach? What are they watching?
Well, the Bank of Korea seems to be juggling quite a few things. They want to see Seoul housing prices really stabilize, get a better handle on how the recent fiscal stimulus is actually playing out, plus gauge any spillover from those U.S. tariffs, and critically see what the U.S. Federal Reserve does. There's that potential September rate cut everyone's watching.
Right, so they're waiting for more clarity on several fronts. But despite holding steady, Citi found these four dovish signals. Let's break those down. What's the first one?
The first is about the internal vote, or leaning within the Monetary Policy Board, the MPB. Citi thinks 6 members, that's up from 4 back in July, might now favor another rate cut sometime soon, say, between September and November this year.
6 out of how many? That's a significant shift.
It is. And one member specifically, Shin Sung-kwan, might even suggest an immediate 25 basis point cut at this upcoming meeting.
Interesting. Okay, what's the second signal?
The second is the language in the official MPB statement. They expected to keep the guidance that, and I quote loosely here, the board will maintain its rate cut stance. So, explicitly keeping the door open.
That's pretty direct language. And the third signal?
Third, the governor himself might reiterate the view that a rate cut is necessary even if the economy looks okay or even favorable. The reasoning points to a persistent negative output gap.
Meaning the economy is running below its potential.
Yeah.
Exactly. Below potential growth. So even good news might not be good enough to stop them thinking about a cut. And fourth, it links back to the Fed.
Okay.
Any hints of easing from Fed Chair Powell at Jackson Hole, which was August 22nd, plus the general market expectation of a Fed cut in mid-September, well, that could really boost the bucker's own capacity, its room to maneuver, with its own rates later this year, say in Q4.
So external factors, especially the Fed, could give them the green light. Now, what recent data actually supports this cautious hold-for-now stance?
We've seen some moderation. The weekly rally in Seoul apartment prices has cooled off a bit. Also, monthly household loan growth slowed down in July. It was the smallest increase since March 2025, actually.
Okay, so some signs of stabilization there.
Yes, and cumulative apartment sales in Seoul also moderated quite a bit in July, so things aren't running quite as hot, perhaps, giving them breathing room.
And what about the economic forecasts themselves? Any changes expected there? Potentially some minor tweaks upwards. The BOK might edge up its 2025 GDP growth forecast slightly, maybe from 0.8% to 0.9%. And perhaps CPI inflation for 2025 gets nudged from 1.9% to 2.0%.
Why the small bump?
Part of it seems to be the fading uncertainty around U.S. tariffs and also just slightly higher actual inflation numbers coming in recently. Oh, and weekly credit card spending did bounce back in July, which was helped by those cash voucher distributions starting.
Okay, so given these dovish signals building beneath the surface, what path does Citi see for the BOK's rate cuts going forward?
Citi's sticking with a forecast for a pretty slow, gradual cutting cycle. They're penciling in 25 basis point cuts, but spaced out. October 2025, then not again until May 2026, and then October 2026.
Aiming for what kind of endpoint?
So see a terminal rate, the bottom of the cycle, at 1.75%. So still some way to go, but taken slowly.
You mentioned the cash vouchers helping spending. How significant is this fiscal stimulus overall?
Well, that first round definitely gave July's credit card spending a lift. And there's another round coming, KRW 100,000 per person, planned for about 90% of the population, starting September 22nd. It shows the government is, still actively trying to support demand.
Makes sense. Now let's talk global influence. South Korea's economy is very outward-looking. Why do actions by the U.S. Fed or shifts in global tariffs have such a big impact on their domestic policy decisions?
It's fundamental, really. As a major exporter, South Korea is incredibly sensitive to what happens outside its borders. U.S. Fed policy drives global liquidity, capital flows. that directly impacts the BOK's own policy space, how much freedom they feel they have.
And tariffs.
Tariffs directly hit trade volumes, obviously, but also just general economic sentiment, business confidence. So the BOK has to constantly factor in these external conditions.
So bringing this all together, how do these high-level decisions, rate holds, dovish signals, stimulus actually filter down to affect people's daily lives in South Korea?
For the average person, this cautious hold means stability right now. But those dovish signals offer the prospect, maybe the hope, of lower borrowing costs soon for things like mortgages or consumer loans.
And the stimulus.
And the cash vouchers are very direct. They provide immediate spending power right into people's pockets, impacting household budgets quite directly. So it's a mix of near-term support and potential future relief on borrowing. It really highlights this complex balancing act, doesn't it? Central banks constantly weighing domestic indicators against these powerful global financial tides.
Absolutely. It looks like a pragmatic approach from the Bank of Korea, keeping options open, preparing the ground for easing, but waiting for clearer signals before acting.
Precisely. And for you, our listeners, understanding these detailed analyses like this Citi report gives a much sharper view of the forces shaping the economic picture we all operate in.
Thank you for joining us for this deep dive into the Bank of Korea's latest signals and thinking.